Well, good day, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up, and this wrap-up is for Tuesday, the 29th of August, 2023, and what a day. You know, we saw the JOLTS report today, and you got to remember and put it in context. When we were in the heart of the COVID back in 2021, the amount of job offers was near 12 million. Today, coming in, the last report we had for June was 9.6 million. We dropped today to 8.8 and a fraction. So the market's looking at this and taking bad news as just what the Fed wants to see. The jobs are disappearing. The Fed doesn't have to do anything. The lag effect is hitting. Maybe the Fed can go on pause. And with that, the first thing that happens is interest rates fall. The stock market reverses course, takes off to the upside. The dollar gets hit. And the market itself starts looking, and as you can see behind me, it's a sea of green. AMC is down, and you know what I think of AMC. Okay, it'll get down to a zone where it makes sense. But if you remember, this is a reverse stock split price at $10, 10 for 1. So that would put this at $1.91, and I thought it would go to $2. You do remember that? Actually, that would be 10 divided by that is, yeah, about $1. $1 and a fraction, $1.09. Said that wrong, $1.09. Then we take a look at what some of the car stocks are doing. I'm not buying into them. The strike is staring in the face. There's no way they're going to meet with the union and agree. So there's going to be a strike there. Copper market took off today nicely. And why? Because China made some moves. They took mortgages and they said, hey, if you have an existing mortgage, we're going to cut your interest rate on it right across the board. They didn't tell all of us how much yet, but that they're doing. Then they told the same consumer, hey, you got money at the bank, here's what we're going to do. We're going to take back on what we're paying you in interest. We're going to cut it between 5 and 20 basis points. Go out and spend your money. Do something. That's the goal here. It's not enough yet, friends. They got to do more. They got to do something that gets everybody. Not everybody has a mortgage. Not everybody's in the bank account. How do they get people to spend a lot of money somewhere? Don't get me wrong. Most people have one of those too. You saw how you rallied in TLT. Oil still up because, hey, if we can take the headwind of a strong dollar away, if things get to the point here where interest rates aren't killing the markets, maybe oil gets a bid. I don't know. That's one argument. All of the stock indices were up today nicely. Look at them. Every single one. They're getting a little rich in the tooth. And I know you're going to say, Ira, you don't know what you're talking about. This move just happened. They're going to keep going. I'm sure that's what you're going to say. Tesla, a nice big gain today. $18 gain. Even ARK went up with that. So overall, a nice day of gains. Now, let me give you something that you might not be ready for. I'm going to be ending this sale very shortly. So the Labor Day sale is on right now. It's 40% off. My yearly research, so let's assume you're a SPDR ETF person. You now pick up my research. How much is this going to cost you to get to my morning report? Here it is. Instead of $120 to get one of these, by the way, 6 days a week, each one about 15 or 20 minutes long. Forget the first 30 days. That means how long the course goes. You won't need it that long. You'll knock this course off in a weekend. But to get an idea of it and to get the research, it's not even the course, the research. This is where you're going to be. This is for the courses. So I wish we had. Lewis, can you put up what the other's going to be? And I'll do this right now. I have some help in here. So give us a second. I want to show you. This is if you bought the Outside Day course or if you bought the Bollinger Band. Now, this is where you're going to be. That's where you're at yearly. So instead of $156, you're going to be paying $93.60. I mean, just take a look if you have an account all the way through as to how this works. I think you'll find this to be one heck of a deal. It's not going to be up there, and I don't know that I'll ever go 40% off again. It's proven that I'm looking at the result, and I probably went too far. So if you want to get this, you move your cursor to the very top here. There's an icon. The other way you get this is you go to our website, and I'll come there right now. You can go to iraepstein.com and go under either research or the education. Now, if you go to research, you saw what we had done is there's a button. It'll land you on the dailies. Move it to the yearly, and that's where your price is. I'm not offering the 40% off of something I deeply discount already for the 30-day trials to what we do, okay? Hope you appreciate that. All righty. Now, let's get to where we're at in the charts. Here we go. And there we are. All right. So we've been looking at Exxon Mobil, and I would say this is just basically a flat chart. Sort of caught in here, not doing a lot one way or the other. The basic trend is down unless you get up and through Monday's highs. If you did that and you got back over this 110.04, you would then have a pattern of higher lows, higher highs. The market is trying to say, hey, I want to stay above the 18-day average in the 200, and if I can get above that, Ira, what I would like to do, I'm pretending on the chart, is I want to go to the upper Bollinger Band at 111.86. Okay, I can accept all that type of talk from the chart. If you take a look at momentum, it's up. The bias is up. The trend is down until you take out 110.04, and if that's taken out, that's what I'm looking for. Now, Rivian today was interesting. They took the CEO of the company who was making $650,000 a year, and they took his salary up to $1 million. I wonder how that sounds to the unions that are going to strike the other automakers. There's that CEO making more than my workers. Number two, they're giving him stock options, rights, lettered stock worth another $15 million based on time. I think it's over a 4-year period. He has to stay probably with the company to get some of it and see just how it goes and where it plays out. I've seen those games before. I had a buddy that was chairman of Sara Lee, one of my close friends. I still see him when I go to Florida. And I remember all the options he got. And do they ever work out? Some do, some don't. I can only tell you that. It's very strange, but a character. So as the market moves up here and through the lower number here, you lost your embedded reading. Let's look at this together. So here's the market yesterday. Were we losing it? No, today it's lost. So the fact that it's lost there says, to me at least, that for the trade to work the way that I think it should, before you get back under right here, this, what is that, I think it's 1848, whatever this low is right there, the Bollinger Band is one of the objectives. I don't like leaving you without knowing what that number is, so let's get to it. It's not there, it's this day. 1948 is the low. That's the number I care about. So before that's taken out, I think the market stands a shot of price and the Bollinger Band coming together. This number should rush down towards that price the way it's set up right here. Do I think it's going to be easy to get under this? Not right now. The chart action is at least negating the idea of staying bearish at this point, but it hasn't enacted an all-out bull signal. In UGA, I don't see anything here. I see a higher high and lower low, a market that's already in oversold territory and basically caught sideways. I don't see a pattern. In XLF, this is interesting. The market has rallied back into the resistance zone of the 18-day average. It has lost the bearish embedded reading. It's hit its upside targets. Let's just see where they came in. Ready for this one? So here's the market losing, not here, the next day, this day, which was yesterday, the embedded reading, it closed 34.18. It should be making a run. Unfortunately, there's not a lot of juice to play for the 18-day average, which it does very clearly. Let me get over here today. There it is, okay? Not a lot of juice to play for. In XLI, outside day to the upside. You know what that means? Take the outside day course. It's right there. What did I just show you? It's like $70. It's a gift at that price. Higher lows, higher highs. As you can see, momentum trying to turn up. The trend is up unless you take today's low out tomorrow or the day after. That's how I view it. Walmart got some nice bids today. Momentum up, trend up. Support's going to be 158.98. Traders won't want to see the market under this break low of 3 days ago, 156.54. And if it can reach higher, 161.96. Boeing. Well, Boeing's trying to come up here. You know, they're hoping China wants to take all the planes that it's ready to deliver to them. That'll certainly help the bottom line. The resistance, though, is still here at 230.56. Nothing bullish on this chart. And in fact, if you take out today's lows, you almost have reason to start thinking bearish again, looking for another retest of down here. Doesn't want to do that. Then in the home builders, for those of you that elect to get my full research, I did tonight an interesting report. I don't mind telling you, it's out of Barron's. And it shows how you can beat, if you're buying new homes, 7% mortgages rather handily. And it's interesting. Now, I know these games exist. You know, look at my hair. I've bought a few homes in my lifetime. And I bought new, I bought old. It's both ways. And when you're dealing with builders, developers, there's many ways they know to skin a cat. They are pros at it if they've done volume over the years. They've been through the cycles. Well, this article, and I give you the link to everything in my report, is there. And that's one of the things I do in my written reports. I don't just stick to, hey, what's NVIDIA doing? I'll take you into different areas that are the whole economy and show, that's why the new housing is stronger than existing home sales, blah, blah, blah. When we get to the energy sector, I don't see anything here. I see a market that's stuck in sideways action. I can't get excited one way or the other, bullish or bearish. In gold, what it appears to me that it wants to do is, number one, it's respecting the 200-day average. Yeah, it got under it. It lost the bearish embedded reading. I think it'll peak out probably in this whole area here. And no, I wouldn't be interested in jumping in. It's overbought as can be already. Silver, overbought as can be. Extended time. I'll let somebody else want to own it. I don't want to own it at this chart setup. Copper. Why did copper go up? Well, China. China's lowering mortgages. They're saying, hey, you got a mortgage? We're going to cut the mortgage rate. We'll put money in your pocket just because you're a nice fella. Well, I would assume they're also going to say to the first-time buyer, that's the new mortgage rate for you, too. Come on in. Bob Barker, come on down. Bob, miss you. And that's what I think is going on with all this, all right? They're trying their best to get people. It's not enough. They got to do more. And you'll hear that. It's country upon country that's their trading partner saying, do more. In TLT, well, now a little bit different game. The first time you're going to tell this market, hey, we might be paused out now. And here's the reasons. It's going to get itself ahead of itself by dropping yield. I think that's what you're into. So until you take out this low here of 94.51, I can make all kinds of arguments for this market to go up another $1.50, buck or so, and then run into resistance. The same argument works against the dollar. If you're going to take away the interest rate factor and say, hey, the U.S. economy is weakening a bit, the first reaction is probably down. So you have an outside day down. You lost the embedded reading before you make a new high on the move, which is yesterday's high, by the way. I would think you're going back to the 18-day average of closes. And in FXE, it's the flip-flop because 40% of the dollar index is made up of this. So if that's bearish, this is bullish. You're already into your resistance. You put it together, you come up with a game plan, and I have one for you. Take advantage of 40% off. You're not going to have it much longer. Move your cursor to the top of the page right here. Give it a click or go to iraepstein.com. Take a look at the offerings and take advantage of it. Don't kick yourself and say, when's he going to offer this again? The odds are I'm not. You have a great evening. I'll see you all first thing in the morning.